back to the channel, everyone. On today's video, I want to be talking about a stock that I had recently purchased. It's a stock that I've been eyeballing for a long time. It's been on my watch list. It is Sbux. I am pretty excited to have purchased this company at a fair multiple at a price that I thought was a good value for me and my portfolio. Now, I've been watching this thing for a long time, waiting for a good entry point, and I finally got it, and I was really excited to buy into this company. However, recently, things have changed. The old CEO, Howard Schultz, is back, and, as soon as he came back, the stock price had a good uptick. People got excited because this gentleman here brought Sbux to where it is today. This is why they have the brand recognition. This is why they have the good quality product that everybody knows and loves. He's done great things for this company, and the traditional thinking is that, if he did such a good job in the past, his track record should speak for itself, and he should continue to do good things for this company in the future. But he said some things that made me sell my position. We're going to go over those in a second. Currently, the stock price of Sbux is $79.50. This is the absolute cheapest it's been in a very, very long time. If you take a look here, I'll put the 5-year chart on. The last time it was trading around this price was 2020. So that's a long time ago to get a great price like this. Now, if you take a look here, you'll notice that the price to earnings ratio is 21.44. Now, for a regular company, this would be high, but honestly, Sbux was in the 40s for a good while. So this has come down a significant amount. This is actually a good PE ratio for a company of this quality, a company of this size and brand recognition. Now, the current dividend yield is 2.47%, so that's actually pretty good because they have a lot of room to grow this dividend in the future. Now, Sbux has a very high concentration of stores in America. Everybody knows this is where they started, but there's a lot of room to grow internationally. China has been getting more and more Sbux stores. The rest of the world wants a taste of the sweet beans that they produce. We're not going to do a deep dive into the numbers, but I just want to quickly illustrate on the total revenue side here for Sbux. If you look at 2018 all the way up to current times, the revenue every year has really increased, minus the depth of the pandemic, but we're at all-time highs for revenue. They really know how to execute and sell $6 coffees. I have $6 to buy a nice Nitro Brut. The taste and the quality is fantastic. I cannot get it at other stores. Like a Tim Hortons is not matching the quality of Sbux, so I am willing to pay more as a consumer, and I know that it's worth the money. So as a shareholder, I know other people are willing to pay as well. Now, if we take a look here at something exciting, you'll notice the basic average shares has been significantly decreasing year after year, minus this little pandemic blip. We'll give them a free pass for that. Now, Sbux buys back an absolute ton of shares every year, and this is why people like this company. Well, it's one of the many reasons, and they also grow their dividend. Their payout ratio, for those who are wondering, it's around 49%, so there's a ton of room for growth. This company is on a great growth trajectory. Now, back to the CEO, Howard there. Howard Schultz had just changed Sbux's fundamentals. He had said they're going to put a halt on all share buybacks right now, and they're going to focus on paying their employees more, which, okay, we'll touch on that in a second, and they're going to, focus on improving the store's locations. I'm fine with improving the store locations, making things a little bit nicer and modern. It's an important part of their brand. Halting share buybacks right now is what I take issue with, because he wants to put that money and give it to the employees. I have no problem with paying people what they deserve. Honestly, working at Sbux, it's not rocket science, but it is a very demanding job. When you go into a Sbux store, the lineup of customers is tremendous. Like at all times, there's always a huge lineup, and the employees are always on their feet, always smiling, writing names on cups for some reason, and they're the amount that they need to customize a beverage before they give it to people is absurd. They really have a lot of customizations on their beverages. This is kind of how the company sets itself apart, gives itself a more premium feel, but it's a lot of work for the employees, and I feel for them. However, they are compensated relatively well for a fast food job. CEO Howard is bending to workers' demands right now because the workers really want to unionize, and I understand wanting to make more money and have more rights and benefits, and I understand that. I'm in a union myself. However, being a frontline Starbucks employee shouldn't really be a career for people. You're getting paid around $18 an hour. It's a respectable wage for a part-time job for a student to save up. It's not, meant to support a family of 3 on one Starbucks salary. It's not what this job is designed for. The Starbucks compensation is fairly generous, to be honest with you. It does seem like a nice working environment. It's just really, really busy. That's just my opinion. It might be unpopular, but if this company remains unfriendly to shareholders, this is just something I don't want a part of. So, I sold my shares recently, unfortunately. I do not sell shares lightly. There has to be a huge fundamental change in a business for me to get rid of a company, and that is exactly what happened. The CEO is bending to workers' demands, and I'm just not going to have any part of that. I sold my shares at around $87, so I made a tiny profit, and I only owned it for a week or two, so I'll take that and run, and, I'll put that into the next company who knows how to treat the shareholders with respect. This is how we do business. This is how you get people to invest in your company. You need to treat them well. I also want to treat employees with respect and treat them well as well, but there needs to be a balance. You cannot be paying every frontline worker $25 an hour for a part-time job. It just doesn't make sense financially. We can't do that in this day and age, not in this economic environment. That being said, I'm going to continue to watch Starbucks. It's getting more and more attractive as it's falling. I'm still not going to purchase until I hear things have turned around. I want the CEO either to leave, a new CEO to come in and say, hey, we're going to change things. This is what's going to be done going forward. Or, I'm just not going to buy it until something like that happens. I'm waiting for this company to turn a corner and go back into the way that I want it, the way that it fits into my portfolio. It's a great company. It's just not ownable right now. I can't own a company like this. This is my opinion, guys. It might not be a popular one. It might be a little hard, heavy-handed, but I got to look out for my family wealth. I need to watch my portfolio with a careful eye. I want to respect workers, but I need my position as an owner to be respected too. Let me know what you guys think. If you're buying, selling Starbucks, if you have an opposing view, if you like the woke culture and you think that the workers deserve more and more money, let me know. I might be wrong. Just give me your opinions and I'll catch you in the next video.